Let's bring in CNBC contributor Peter Boockvar, Chief Investment Officer at One Point BFG Wealth Partners. Peter, great to have you with us. I just want to sort of fold you into this conversation that we're having. And the CPI gives us the green light to think that there's two more cuts. But at the same time, we are at record highs across the board, entering a huge earnings season. What's your view of the markets and how we are valued right now?
Well, now, relative to 2025 earnings estimates, obviously we have more to come with Q4 after Q3. We're trading at 25 times. And, Tim mentioned valuations don't matter. They don't matter until they do. And I'm not sure when they will. With those big names that we're going to see earnings next week, the interesting thing that I find is that now that they've all turned themselves into highly capital intensive businesses with much higher debt levels, much less cash flow, the market is still valuing them at the same multiples as they were when they were asset light and very cash generative. Now that can continue, but I think that that's something that investors should think about, particularly when they digest next week's earnings, particularly the CapEx levels relative to revenue that are now at extraordinary levels.
It is amazing to think that you have gone from a picture where you rewarded the companies for not spending all that, being asset light, to now being asset heavy because they are spending on all this hardware, et cetera, and expending all this CapEx and still getting the same valuation. I mean, it just sort of turns it all on your head. In terms of where you see value in the markets, though, you do like energy at this point? I mean, you think that that's a place where you can still see some gains?
I love oil prices here. I think they're dirt cheap. I think the catalyst this week with the sanctions on Rosneft and Lukoil, in addition to India and China related to the sanctions buying less oil, I think is a major catalyst. And even going into this, I've been thinking that we are setting up ourselves for a rally. That has to do with U.S. shale that is no longer a major contributor to global oil supply. That is OPEC production, which is not keeping up with quotas. The whole world is bearish on oil. Every day I hear about us swimming in it, but I think $60 is dirt cheap. The other area that I love that's been thrown out the window this year are the consumer staple stocks, which are now trading like bonds with 4%, 5% dividend yields, cheap valuations. And if the economy does continue to slow, I think this could be a port of safety for investors.
Hey, Peter, Tim, yeah, we've been talking about the oil trade. We've been talking about OAH over the last couple of days, and the comment has generally been, don't sleep on energy because just when you're not expecting it, it has a 70% move or a 70% half year, et cetera. And what you're talking about sets up well. What does today's CPI do on a week when gold had this extraordinary pullback from a sense that, this had gotten not only over its skis, but this was, now really into maybe margin territory? There could be an argument that if there really is less inflation, you have removed one of the dynamics for gold. You're a gold bull. I'm a gold bull. Anything change for you this week?
Not really. I mean, CPI was still 3%. And if you look at the Treasury market today, after initially rallying and seeing a dip in yields, they pretty much closed to where they were right before the number came out. So I still think that we're stuck at around this 3% level on inflation. To me, the question with gold is it went vertical. It was due for a rest. It was due for a consolidation phase. We know whenever we see a chart pattern like that, it's getting way too ahead of itself. But the main driver of gold we know is central bank buying. That has now been followed by retail and institutional buying. And as long as that central bank buying, which is price agnostic, remains, I still think that the risks are much higher gold prices, silver prices after this period of consolidation.